Welcome to the AdHero Podcast. My name is Geno Giovanni.
And I'm Matthew Olivieri. And we're your personal AdHeroes. We are back for season. Man, I'm sorry. I'm like on a high from that song. That new intro song just slapped, man. That new intro song was coming in hot.
It was. Yeah, changes things up in season 5.
Season 5 changing things up, man. It's been a long time coming. Thank you guys so much for your patience while we were on a little bit of a hiatus. But we're back. Season 5 is officially underway. And hey, at the time of this recording, it's actually St. Patrick's Day. By the way, Mr. Producer, thanks for the long hiatus there.
Yeah, my bad. Just kidding. It was a long time coming, but we want to make the show better than previous seasons. So now that season 5 is officially underway, we have 2 reasons for celebration. One, we are back online or on air, if this was, radio. And of course, it's St. Patrick's Day. So hence all the green, being worn here,
Yeah, we are. A lot of green in the house today to celebrate. And I'm thinking about going out tonight, man. I think people are over the pandemic now, and I think the bar scene is going to be lit tonight. But we'll see. We'll find out. How about yourself?
Nah, it'd be nice. However, I went out for my birthday the other day and drank a beer for the first time in years.
All right. Happy birthday. How was that? Was it a good spot where you went?
Oh, I loved it. I had my family, had some great eats, and a drink at a microbrew here in the Motherlode.
In the Motherlode? Okay, very cool, very cool, very cool. Well, listen, guys, we are let's talk about today's show because we have a banger lined up for you guys. If you're keeping your ear to the ground about what's been happening in the news, massive news story broke just the other day. Silicon Valley Bank, one of the biggest banks in the world, shut down, doors shut down, government coming in, taking over, and not only for less than 48 hours later, another major bank also imploded and collapsed. So we're gonna talk about that today, but we're actually gonna look at it from a different perspective of how businesses can actually optimize and take advantage of a horrible situation like this. You might be shocked at some of our findings, but that's why you got to stay tuned. But right now we have a brand new segment on the show. Before we get to that, we have a brand new segment on the show for season 5. We're calling this the lightning round. All right, so for the A block, we noticed that you guys, our listening audience, you like things sped up a little bit, right? We're living in a fast-paced world. People want to get their information quick. So we're trying to bring something new to the table here where Geno and I are going to just rifle through a handful of topics. We only get 60 seconds to do it, hence the name Lightning Round. And it's just going to be rapid fire. We're going to say something that's in the news or a trending topic, and we're going to take turns giving each other's feedback about it. And then we're going to wrap it up in 60 seconds. So, Geno, are you ready for the first lightning round ever on the AdHero Podcast?
Let's do it.
All right. Let me start the clock. And the clock is going to start right now. Okay. Mint Mobile sells for $1.3 billion to T-Mobile, while minority owner Ryan Reynolds earns a cool $300 million. Deadpool coming up. Geno, what do you think about that?
Well, the two companies, Mint Mobile and T-Mobile, have always worked together. In fact, Mint Mobile's been on the T-Mobile network, but now T-Mobile gains another advantage with having Ryan Reynolds as part of their marketing, and it seems like nothing's going to change. In fact, they're still going to keep with the same low cost. Matter of fact, full disclosure, I'm a Mint Mobile customer, and I actually I love it. This is great. This is great news.
Next.
All right. Are the Oscars done? Continuing low ratings, political speeches, and best picture movies very little people have ever heard of that win every year and won't watch for a second time. Matthew, what do you think?
Yes, I think they need to go back to making the Oscars fun again, the way they used to be when I was a kid watching them. Too much politicized stuff, too much woke information, no longer interested. And that's it. That's how we're actually over 60 seconds.
Oh, shoot.
Geno, Hugh Jackman is preparing for Deadpool 3. Is he getting too old to pull off this role, or does he have one more film in the tank?
He's Wolverine. He lives forever. Yeah, that's your answer.
All right. There you go.
Okay.
Let's go to the next one.
Go woke, go broke. Disney cancels Willow on Disney Plus. Another scar from trying to have diversity, equity, and inclusion. Or has Disney just lost its magic with content and can't make shows or movies anymore?
I think this, I want to channel my inner Patrick Bet-David here. He said Disney needs to know who its customer is. Its customer is families, moms and dads with small children. They like normal. They don't want to be all this craziness that's out there. Disney, stay in your lane. That's why we're glad you brought Bob Iger back. Let's go.
Yeah, there we go. Good.
All right. So that we went a little bit over on the first lightning round, but hey, listen, season 5, cut us a little bit of slack here. All right. Don't destroy us on the comment section, please.
The collapse of Silicon Valley Bank, Signature Bank, and other regional banks has sent shockwaves throughout the banking industry. As these institutions struggle to stay afloat amidst a sluggish economy and mounting competition, marketers are left wondering what impact this will have on their advertising strategies. Many marketers have long relied on these banks to provide financial services and support for their businesses. With the collapse of these, marketers are now forced to seek out new banking partners to help them reach their goals. At the same time, the marketing slowdown that accompanies these bank failures present a unique opportunity for savvy marketers to stand out for the competition. By offering innovative solutions and new approaches to financial services, these marketers can position themselves as leaders in the industry, even as others falter. Ultimately, the demise of these banks serves as a reminder that no company is too big or too established to fail. As marketers, it's up to us to adapt to these changes, stay ahead of the curve, and find new ways to succeed in the ever-evolving marketplace. The recent collapse of Silicon Valley Bank, or SVB, could lead to belt-tightening measures and accelerate MarTech and AdTech consolidation in an already lean year, potentially causing smaller vendors to merge with larger platforms. While more established agencies and brand marketers may not be affected in the short term, the situation casts a pall over a shaky economy and could lead to the brands becoming more risk averse in terms of vendor size. SVB had historically provided creditors facilities for early stage organizations that were traditionally not available, making it the most friendly startup bank ever. That's for sure. But did they even know how to bank? Matthew, is taking advantage of opportunities when someone, or in this case, something fails, a risk, or is there an upside to it?
Is taking advantage of an opportunity when something fails. I think it's smart. I think it's very smart to take advantage of an opportunity when something huge like this fails. Let me give you a perfect example. During the pandemic, there were a lot of, obviously, many companies, including AdSemble, that were hurt very bad by the shutdown and everyone having to be in lockdown and can't go out, can't do anything. But mortgage lending companies, because the Fed lowered the interest rate so low, mortgage lending companies jumped all over that opportunity and they made a killing. I had several personal friends in the mortgage lending industry. They never had a better time in their life than during the pandemic. Okay. And there were other entities too that thrived during that time period. Okay. So who can really come up really big with this? And by the way, quick story about Silicon Valley Bank. When AdSemble first got started, one of our early advisors to the company had really been pushing me to actually put our money with Silicon Valley Bank. They had some different loan programs. They had some different stuff. And something inside me said, don't do banking with them. That was many years ago. So am I Nostradamus? I don't know. Well, I have guessed correct on a few things in my life. So maybe that was yet another one, or maybe that was God bailing me out. We'll see. Time will tell. But no, we didn't. We actually did not end up going to Silicon Valley Bank, and lo and behold, our deposits are safe. So local regional banks, smaller regional banks, credit unions, other independent entities. I think this is the ripe time for these guys to come in on the heels of this massive fallout and be there for all the businesses that are severely impacted by this tragic event. And, let me definitely clarify that anytime an event like this takes place where people lose their payroll, people lose their mortgage payments, people lose their houses and their retirement plans, it is not okay. All right. Whatever the people were inside SVP who made these series of decisions that put the money at risk and caused the bank to ultimately fail, they should be held accountable for that. They were being entrusted with millions and millions and millions of dollars of other people's money. Those people were faithfully making those deposits, thinking that their money was safe. At Geno, as you're probably aware, the federal government will only insure up to $250,000 of every single person's account. So if you have, let's just use simple math, if you had $1 million in Silicon Valley Bank, $750K of that money just went up in smoke, and you will never see it again. All right. I can understand why so many people are upset about this. But again, to your point, the opportunity for credit unions, local banks, local investment companies would be to get in touch with these companies and maybe come up with a product, come up with something, kind of like the Ad Symbol has our spring special where we're helping businesses right now kind of launch their brand for springtime with a fantastic deal on our Target Display Network product. These banks and local branches can come up with some sort of thing that can get the businesses to start making their deposits with them. And it could actually be a great thing for local business. What's your thoughts, Geno?
Yeah, I mean, this all stemmed from the article on Marketing Drive, where it talked about the same thing and about how businesses were kind of scaling back on things on advertising all of a sudden. But there's a perfect opportunity for businesses. And I'm not trying to make this a commercial, but at the same time, it's like, hey, it just so happens to be that Ad Symbol is running a special at this time. And what better way than to take advantage of opportunities, especially when your business is affected. You want to talk to somebody to kind of keep involved. When it was the pandemic, did you scale back then? I mean, I'm sure that there's some companies that did, but even Ad Symbol, we didn't do this. We were steadfast, along with a lot of restaurants still advertise. So I think that there's an opportunity.
You got to find ways. Yeah, you got to find ways. You got to find ways to survive. Yeah, absolutely.
Yeah, that kind of inner hunter has to come out.
Right.
This is such a complex issue, and there's so much stuff that we can get into when it comes to here, including in the ways that these banks kind of marketed their dollars and made it so that this was not this just didn't happen just all of a sudden over the weekend. I mean, this was talked about months ahead of time, and that there was. Well, it's not just the banks, it's the federal government that basically allowed this to happen. This is almost exactly the whole thing with Fannie Mae and Freddie Mac. So I think the takeaway here, though, is, what we learned from things like the pandemic, to kind of go inside your inner hunter, kind of stay alive, stay hungry, and come up with other ways for you to market your business or advertise your business. And you might have to, just like the article says, you might have to either, instead of just scaling back, but you might have to merge with other companies. You might have to be bought out. There's a lots of different opportunities. I know that will happen with it. It's not all doomsday. Stuff can happen. You can make things happen. this is America, the land of opportunity. How about that?
Right. So the overarching takeaway here is, if you were a business that was affected, if you had money in Silicon Valley Bank and you have just suddenly got notice that all that money is gone, yes, you are going to have to do a very hard look at your balance sheet, a very hard look at your income statement, all your different accounts, where you have money sources coming in, where you have additional staff that might have to be furloughed, where you're going to have to make cuts to survive. Okay, that goes without saying. That's what also happened during the pandemic. You're also going to have to think outside the box at how you maybe jumpstart some more sales, or go to clients that are really good customers and see if they're willing to give you maybe some of the money they owe you like 6 months down the road. Maybe they can give that money to you up front for a little bit of a discount. So if they owed you like $1 million next year, say, hey, can you give me 850,000 of it now? I'll give you, or 900,000 of it now. I'll give you $100,000 discount if you give me all that cash up front. So those are going to be some of those financial mechanisms that you can use to get a sudden influx of cash to help you. This is if you're a business that had money in Silicon Valley Bank or one of these big banks and you were affected by this, okay? On the flip side, if you're a local bank, a regional bank, or a credit union, you should be actively looking, you work in one of these type of entities, you should be actively looking at how you can partner up with other banks, other institutions, other things, and maybe you guys can make a coalition or a collaboration on some sort of product or some sort of thing that can reach out to these companies that no longer have a bank to put their money, right? They don't have Silicon Valley Bank anymore to make their deposits. So they're going to have to go somewhere. Are they going to go to Wells Fargo? Are they going to go to Chase? Are they going to go? Where are they going to go? Many businesses are worried about putting their money in a large bank. So I think if you're a local branch or a credit union, you have a golden opportunity to seize a lot of these companies' attention and maybe start getting some big deposits in. So two interesting, different perspectives on an otherwise very tragic event. Geno, you got any other final things to add?
No, but I think you hit it on the head, and I'm just saying, like, I think with the big banks, I think that they're going to capitalize on all this as well, because it's going to be like, hey, this is what happened to the small banks. You want to come with us to the big banks. So again, these big industries, it's not just big banks, but big food, big pharma, all these places are going to capitalize. And I don't know if that's very good for America, but the takeaway here is that there's always a way. There's not just one way to do business. There's lots of ways to do business, and hopefully you do it in the accordance with the law.
Yes. So, all right. Well, excellent first show here to kick off season 5. Again, we thank you guys so much for being a part of the AdHero Podcast experience and all the ways you find us and watch us and listen to us. Don't forget to drop us some comments and share with a friend. But just to bring it home, we did want to wrap up today's show by honoring a friend, a very close friend, and a fellow AdHero who passed away over the break. Andrea Messimer Henley from Sarasota, Florida, was a mother, wife, CEO, author, and founder of Smart Outdoor Media, as well as the owner of a fitness gym. She actually talked about gym marketing strategies during a pandemic with us in season 2, episode 33, which to this day is still the most listened episode of the AdHero Podcast, which is crazy considering we are now in season 5. Andrea had a passion for business and all aspects of advertising and media, especially the out-of-home advertising industry, where she was very, very loved. She even hosted an episode of the AdHero Podcast with Lee Rankin. You guys can watch that on season 3, episode 43. She did an excellent job guest hosting that. A person never had a bad thing to say about anyone, and something that the world desperately needs more of is people like Andrea. She will truly, truly be missed, and may God bless her family. And Andrea, from all of us at the AdHero Podcast, rest in peace, and she will really, really, really be missed.